Let me ask you about your progress when it comes to hydrogen, because hydrogen is clearly also called the future when it comes to energy supply, but it seems to be quite difficult, right?
Well, we are investing quite a bit in hydrogen every year, particularly if it comes to electrolyzers on green hydrogen. We just deployed the next project into China also to demonstrate green hydrogen there based on our technology. We are discussing new projects also outside Europe to really demonstrate the whole value chain from renewables to a molecule. But as you absolutely rightly indicate, it will take time until green hydrogen in particular is available on a commercial base. And I always say I expect it after 2025. We have to be aware that we are in a case where we demonstrate pilot cases. We can do this, but the boundary conditions in the energy market have to change to make green hydrogen viable. Today, it's too expensive in terms of the operations particular. And this is why I think a lot of things still have to happen, even though we continuously demonstrate in new projects the application of green hydrogen.
Christian, in terms of operational performance, investors seem keen to see a profit margin improvement now that you've spun out from within Siemens. What do you expect to be able to deliver in terms of margins?
Yeah, I mean, we demonstrated it also on the Capital Market Day. I mean, we indicated that we want by 2023 to show 6.5% to 8.5% EBITDA margin before special items, which is a significant uprise in terms of our profitability. At the same time, having spoken to really hundreds of investors over the past couple of months, I think investors expect two things from us. On one hand, they expect an uprise in profitability. No question, we have to deliver on that. But the second piece is also on how to drive a portfolio to a future set state in the energy industry. So how do we invest into sustainability and how do we invest into service? And this is something which we're trying to push at the same time.
And in terms of your overall push into renewables, I certainly take your point about a more realistic time frame for transitioning away from traditional fuel sources. It looks like you're involved in generating about 1/6 of the world's electricity, but your renewables business only accounts for about 1/3 of revenues. When would you expect this shift to come where renewables account for the lion's share of your revenues?
We're always going to have three things in our revenue, right? The one thing is electricity generation, and this we expect to grow over proportionally on the renewable side. The second element is transmission and storage. Don't underestimate this. This will be key to drive the infrastructure going forward. And the third leg of our revenue stream going to be the improvement of existing assets. So the demand side improvement, making processes more efficient, electrifying process industries, automating process industries, and through digital solutions, make these existing assets more efficient. So we're always going to see these three legs which we want to push going forward. And I would count all of these somewhat obviously relating to renewables. Today, more than 50% of our revenue sits somewhere between renewables and transmission. I expect this really go over the next decade really to tremendously change in a lot of areas, changing around the portfolio, seeing also how the energy market is changing.